Good afternoon, everybody. Welcome to this week. Boy, what a week it has been. Um, isn't it kind of amazing? We've had nothing big happen over the weekend. This seems like the first weekend in a long time that people haven't been panicked or just crazy stuff has been happening. So I'm taking it. I am definitely taking it. So it's always good to see you guys in the house. You'll probably notice I did use the same thumbnail for this episode, and that's because I've just been looking. I've been looking for a thumbnail I like, and I think I like this current one. So I'm probably going to use this one going forward. And I'm also trying to find as well for the market closes a red version and a green version that I like. And I think I'm pretty close with those as well. So, yeah, just a little bit of consistency. So hopefully, hopefully none of you guys, well, probably nobody here, but hopefully nobody came along and saw it and said, "Oh yeah, I already saw that one last week," and then didn't come in. So I'm hoping that didn't happen. I'm hoping so. Um, as I always mention towards the beginning, Blossom is that social media app that is designed for, well, investors. It is a place that you can meet, you can talk, you can share your portfolio, and now you can do a super chat. They have a new feature that has just come out where you can instant message. So that's fantastic. I can't wait to try it out. I haven't actually tried it yet, but I'm liking where they're going with it. So with that behind us, we got, of course, we got our news, all of that fun stuff tonight. Well, this afternoon depends on where you are. I guess this is pretty early in the day if you're on the West Coast. So hopefully, hopefully everything has been fantastic. I know there has been a bit of bad weather. I think Montreal had a lot of rain. We certainly got quite a bit of rain as well, but not enough to really be flooding too much things here. And actually, really interesting. We just had a funky rain shower that came probably about 20 minutes before the stream started. So that was kind of fun for sure. All right, I am working on redesigning. Um, I'll show you guys later, but I am working on redesigning the main data thing for the 0 to 100K. So I'm like, okay, now that now that I know how to pull prices into Excel, I'm like, let's see what I can do with that. So that is as funny. I was actually working on it late this afternoon after I finished editing the video that's coming out Tuesday, and it was fantastic. It was fantastic. All right. Anyway, let's quickly say hello to everybody in the house. We got Jonathan. Jonathan, yes, you are definitely early. You're almost always first. You guys got to get up pretty early in the morning to beat Jonathan most days. So that's kind of cool. Bismarck, he says, hello, all. I hope everyone had an enjoyable weekend. I hope so as well. Mary is in the house. Hello, Mary. And of course, with Mary here, you guys have to hit that like button. So make sure you hit that like button. It really, it helps the channel quite a bit. It actually tells the algorithm that people are liking and engaging. And then the algorithm says, oh, let's push the live stream out to more people. So that is always a good thing. Al is in the house with a bonjour. Bonjour, Al. Ça va? Let's see. We got Lisa in the house with a hello, everyone. Stan is in with a hello. And Vic was in. So was last Monday some sort of market panic? Yeah. If you guys who were here last week, I talked about, I talked about the fear that was going on in the market and what it really meant. And as you guys can see, yeah, that's pretty much what it turned out to be. Things have gotten back to normal by the end of the week. Now with Canada, So on Monday, because we were closed, well, technically not Monday, but because we were closed on Monday, a lot of that red that would have happened on Monday when the US was still in a panic ended up happening on Tuesday. So it was basically a day late. But things have calmed down. And the whole Sam thing is, people have sort of put that behind them. We're looking for new things to panic about for sure. But for now, everything is looking good. We're not at that point. Like, there are people going on saying, like, I can't believe how many times I saw, and I was actually seeing it on legitimate news sites as well, that the US is probably going to do an emergency rate cut. They're not doing an emergency rate cut. It's not that bad. If it really were as bad as everybody was trying to say it was, then yeah, sure, that might have been an option. But I do give Jerome Powell and the crew down there at the Fed a lot of credit. They're not, I mean, they're not stupid people. They know what they're doing, and I think that they're not. I have a feeling that monetary decision is not made by watching a bunch of fear videos on YouTube. I'm pretty sure that it's not. If it is, then oh boy, we got bigger problems than than what we thought we had for sure. All right. Terry is in the house with a hello, well, with a cheers, folks. Um, and we got Abalash in with a hi, Candace. Hello, Abalash. Always good to see you. Always good for sure. Um, yeah, I think the markets they're starting to look up a little bit. I'm still I'm still bullish, I think, overall on August. I'm not saying that it's going to be like a great month. I don't think we're going to have like a lot of huge things in August, but I think when we get to the end of August, I think we'll be above the zero line. So I think that the overall gains in August, they won't be great, but they will be green. So that's kind of where I'm going with that. And I know there's a lot of people, like I've already started to hear people say the words dark September. Oh boy. Um, I'm not I'm not in that camp at the moment. You know, and that's kind of interesting. A lot of times, if you get enough investors believing that the worst is going to happen, and they all start selling, that can definitely help sort of self fulfill their prophecies, I guess. But I think we're going to be fine. I think we're going to be fine. I think this will be a half decent month as we move along. Whew. Now, I also think as we start to move into the fall, we have to sort of start thinking a little bit about Bitcoin as well, because there is always that length of time. So after a halvening event, which we had in April, it normally it can take up to 5 months, maybe even longer, before we start to see, what that is actually going to do to the price of Bitcoin. So that's a fall thing. So that's like coming into, it could even begin in September. But I think we're going to have a strong end of the year for Bitcoin. So just something to keep in mind, to sort of keep your eyes on on your crypto assets, or if you've been thinking, I'd like to get into Bitcoin, but when's the right time? I would say right now, while it's still relatively low, I'm kind of hoping. It's kind of funny. Like I ended a trade on Friday, so I'm actually hoping that Bitcoin crashes over the weekend because I'd love to get back into a new trade at a nice low number. So that's something to keep in mind. So hopefully Bitcoin has a bad weekend, and then it can rebound once I get back in. So I'll buy Monday morning, and then Bitcoin can go to the moon. I would be happy. I'd be tickled pink if that happened. All right. We got Vineet in the house with a hi all. Patricia is in here as well with a hi, everybody. And Skiz is saying, so no dark September. How about Red October? I think that was a movie, actually. But nah, it's like everybody's always is the thing about September. September has a bad rap as being a month where, you traditionally, your average looks pretty low compared to other months. And there's a reason for that. A lot of the big crashes that has happened in the past, a lot of them have happened in September. So two good examples of the housing crisis that all came to a head in September. 9/11 September. So a lot of these things have, for whatever reason, all happened in September. A lot of black swan events. Um, there's nothing you can do. That has skewed those numbers down. So September, is not as bad as everybody makes it look. But if you take the data and you don't sort of take into account some of the big events that have happened in September, um, you can definitely make an argument for September being a bad month. But I don't subscribe to it. I don't at all. JJ says, howdy, howdy, and happy Sunday, everyone. Let's see. What Bitcoin do you trade? So most of my trades right now, I use, because I'm doing it with stocks, I'm using usually Bitcoin ETFs. I usually do plays on them. So that tends to be what I will do with Bitcoin itself. So I'm not currently, I probably have like a tiny, tiny amount of Bitcoin sitting over on ShakePay. But I don't think I have, I wouldn't say I have very much. I probably have like maybe $10 of Bitcoin sitting over there. It's nothing really significant. Let's see. Prairie says, good afternoon, everyone. It's been a while since I made it to a live stream. Fantastic to be here. It's good to see you, Prairie. Well, gosh, it hasn't been that long. Well, you were on, like Prairie came on the air during that 7-hour stream that we did, the open to close for the 4,000. So now, of course, we're starting to think about the 5,000, and it is happening. It is going to happen. Right now, we've just crossed 4,100, so another 900 to go. So I got to start thinking about that. I really, really, and I know Jonathan is here. No, I'm not going to be skydiving. I am not skydiving. Abalash says, I unfortunately sold all BCE for TELUS. Do you still think TELUS is a better growth, not dividend stock compared to BCE? It's kind of an interesting thing. I think BCE, I like BCE a lot, and I do think that they're certainly going to do a lot of recovery. But I think that the whole sector, I think if you're on board with BCE or TELUS, I think it's splitting hairs as to which one is going to be better when we start looking at longer time frames. The only one that I would be more hesitant with is just Rogers, and that's simply because they have significantly more debt than the other two, and that's all because of that purchase of Shaw Communications. Once they get that debt under control, though, they'll be in a strong position at that point. So for now, I think BCE and TELUS are both good plays. And if it's a situation where you say, okay, I got Bell or I got TELUS, should I have gotten the other one? Don't worry about it. Don't worry about it. Either one is fine. Vic is saying, sitting like 1,000 plus TELUS and praying. Nothing wrong with praying. JJ says, I broke my phone screen this morning and it's going to cost half an arm to replace it. Oh boy. Well, on the bright side, it's kind of funny. Replacing a screen is really, really expensive. And I'm thinking, I don't know if you're using Android. I think you're using Android. Something tells me you're using Android. But you might start looking at, maybe, I don't know, maybe a new phone at this point. So that's the way I would look at it. If I broke my screen to the point it was unusable, I wouldn't be looking at fixing it. Now, mind you, my phone is getting old. It's, it's like an iPhone 11. So I would be looking at a new phone in a case like that. Vic says Air Canada coming off $14. Yes. So here's the interesting thing. So I added 3 shares of Air Canada to the challenge. So, and I bought in, let me take a look. Give me a second here. I'll pull it. I can't pull this up right now to show you guys, but I can at least pull it up so I have the data in front of me. All right. So yeah, I bought 3 shares of Air Canada just to get my feet wet on this at $14.65. They closed on Friday at $15.62. So I'm already up 6.62% on that purchase. So it's kind of that neat thing. Well, my goal is, and because I'm always talking about it, people are always asking me about Air Canada. And I bring up the graphs problem. Almost every stream, I think I have to pull up the Air Canada chart. But I keep talking about how I think this is a good buying spot. and that my goals would be to buy, while it's nice and low. To me, anything under 19 is good. I used to say 20, but I'm going to say 19 because 20 is where I'd like to sell it. So you want to at least make something. So while it's low, stack up. I do think it will get back to 20. It's not going to get back to 20 tomorrow, or probably even in 2024. But I wouldn't be surprised to see it hit it in 2025. So I will then sell whatever bags I currently have of Air Canada when it gets back to 20, and then I'll wait and hope it crashes again. That would definitely be nice. Funny Books is in the house. Whoops. Funny Books is in the house. Hello, everybody. Glad to make it today. Good to see you. It's always good to see you. Let's see, JJ, $400 just for the OLED. Oh, there you go. There you go. So, and here's the thing too. I mean, I don't know how well Samsung is, but you might be able to take it in and say, okay, I cracked the screen. How much can you give me on it if I do a trade in? So maybe you can get something to at least even pull that price down a little bit. Just a thought. So let's see here. Mine's the equivalent of the 11 Pro Max for Samsung. Okay. Still using the iPhone 11. There you go. Me and Patricia have the same phone. What color is yours, Patricia? Mine is red. I got the red one. All right. Vic says, I love me home button. Okay. Nothing wrong with a home button. Let's see. Ian says, did you do comparison videos before? Would like to see BHP versus REO, MOS versus NTR. So what I did do is each year, as I come into a new year, I try to look at something I can do on the channel that's new, give it as a trial type thing. So with this year, it was the market close, bringing that in because I tried it over Christmas. I sort of ran, I did market closes every day for 12 days over Christmas. So I did that. Now the year before that, what was that? 2022 going into 2023, I introduced battles and I started doing the battles. But the problem is, and this is kind of that thing. If the battles got probably 25% less viewership than the deep dives. So at that point, I'm like, well, if nobody's going to watch them, why am I making them? So I kind of stopped doing the battles. A couple of them did really good. One of them, though, was timely because I did Brookfield Corporation versus Brookfield Asset Management. And that was just after, of course, when they did the old Brookfield Asset Management basically spun off Brookfield Corporation and the new Brookfield Asset Management. So there was a lot of confusion, and I think that really helped that one do really well. But overall, they didn't do super great. So I kind of put them on the back burner. I moved them off, and I'm like, okay, let's go back to what replaced the idea of doing the battles is when I started saying, you know what, let's do the whole thing where everybody can vote for what they want to, what deep dives they want. And that kind of sort of phased out, and I went into the whole voting system, which has been doing pretty good. So I always look at it that way. Not to say I'll never bring a battle back. I probably will. It's just one of those things. And keep in mind, for the channel members, that last video of the month, they get to choose what it is. So if the channel members decide we want a battle, they're getting a battle. They have all that power. So I don't have any choice in the matter once the channel members have spoken. Jonathan says, maybe you should put the skydiving to a vote. No. I believe in democracy, but I also believe in I know we're in Canada, but I believe in the presidential veto, and that's a veto from me on that one. Here's the reality is I'm not afraid of heights. I'm not afraid of heights, but I'm afraid of falling. So I can go up in a plane, no problem. I can look out the window. I can do all that fun stuff. But there's only one way I would skydive out of a plane. Somebody's got to push me, and I don't have a choice. That's the only way. And I'm pretty sure that nobody's going to do that. It might even be illegal to push somebody out of a plane. I'm not sure, but it could be. Let's see. I am in at $15.69 in Air Canada, and that's not a bad price either. Like, I'll buy some more Air Canada as we move along. So I know that right now the nice entry point I have, it's going to be averaging up as I'm buying some more. But I firmly am committed to getting to that 20 and then selling it. Vic says, have both Mosaic and Nutrien. Oh, there we go. Let's see. And Ian says, I would think battles would have higher viewership, twice as likely to pick a stock someone is interested in. Well, you would think that. That's what you would think, but it just didn't work out that way. It just didn't work out that way. But you know what? I'll look at bringing back a battle. I'll look at bringing one battle back in the fall. Yeah, we're almost there. So probably September, I'll do a battle. I'll look at the schedule tonight. And I'll figure out where I can fit it in. But I'll do one battle. I'll bring one back for you. And that'll be interesting. What I'll probably do is, you know what? I will go to the channel members and I will ask them for the battle. I'll let them pick who's going to fight who. Now, the only stipulation I would give them is that, having somebody fight somebody in a different sector is not as good as having two people from the same sector. So, for example, two energy stocks battling each other, two banks battling each other. Total. Actually, at one point, I did a three-way battle, a cage match between Rogers, Bell, and TELUS. So that's on the channel as well. So, but yeah, I'll throw that to the channel members, and that way there we can get we'll get something. We'll get something on there. You guys want a battle? We'll find a way to get a battle. Ian says, I owned Royal Helium a few years ago at like 75 cents. It's less than 10 cents now. Saw an ad for it on my Facebook. Ever hear of it? I have not heard of Royal Helium, but 75 cents to 10 cents. Ooh. Now, are you still holding that? Because I'll tell you, that would be a hard one, especially it depends on how many you have. Like if it's just a small loss, I probably would take it and get rid of them and say, all right, that's a mistake. I'll put it behind me. But I mean, if you got a big investment in it, then you got to be like, is there any chance they can recover? Because, well, here is one thing. I will say this. Now, I'm not talking with stocks. I'm talking about helium. Helium is a rare, it's pretty much a rare element. Like right now, there's only so much of it on the planet and we're losing it. So it is becoming more and more rare. So in the future, helium will be much harder to get than it is today. But I don't know if that's going to really help 10 cents get back to 75. Vic says, anyone know how to not get all that mail from Wealthsimple for each stock held, voting, meetings, etc.? This is a guess. So this is 100% pure speculation. If anybody knows the right answer, then definitely let me know. But what I think is I think a lot of that mail comes and there's things that you can send back to whatever the stock is, where that they will, basically it gives them permission to electronically reach out to you. So that way there, instead of getting actual mail, it'll come through your email. So I do believe that a lot of them do offer that. And I think if you do that, it should, hopefully, fingers crossed, it should take care of that. I'm hoping that. Oh boy. I was waiting for somebody to bring this up, Appalachian. I was waiting, and it's you. That's fine. So AQN. If you remember my last video that I did on AQN, what was the thumbnail for that? Oh yes, it was a dumpster fire. And yeah, so they're falling again, and they have another dividend cut. It's hilarious. Every time I think AQN can't fall any lower, they and this is somebody actually posted this in one of my comments. Anytime AQN shouldn't fall any lower, the AQN management says, "Hold my beer," and they find a way. They just keep on going down. Now, I know they're selling off assets. They're trying to make themselves profitable, cutting the dividend. It's probably good moves from their perspective. Not great moves if you're an investor in AQN. And at this point, I've been sort of preaching be patient. Be patient. I mean, you know, they should respond well to rate cuts, but they haven't thus far. When you look at other companies, companies that are really well run, like TELUS, or sorry, TELUS, Fortis. That's what I was thinking of, not TELUS. Not to say that TELUS is badly run, but Fortis is a good company, for example, and they've been doing really well with the rate cuts. You can already see it starting to pay dividends, and that's a good thing. But with AQN, they're at that point where it's just not doing it. And a lot of the moves that they're making, when you look at it, yes, they look haphazard. Yes, they look like, oh my God, what are they doing? Why am I even looking at this stock? But hopefully they pay off. Hopefully they pay off. But I think at this point, I got to officially say, I can't recommend. I cannot recommend AQN. If you've got a massive, I mean, if you're in deep, and you're in deep, and you're not willing to take that giant loss, I can respect that. But if you see an opportunity to make your money back, uh, you know, it would be tempting. It would be tempting to do that. So just something to keep in mind. Let's see, just past 1 year Hawaiian Fire. Oh boy, has that been a year already? Let's see. Ian says, I got a letter from Wealthsimple about Canoe. First mail I got from them. Oh wow. Yeah, no, every year I get the annual report from Canoe sent to me. And that's the thing. It's like, you know what? I can go to Canoe's website and just look at the report. So I'm surprised that they spend so much paper. Like, to me, that's a waste. That is a waste. But you know what? There are, especially amongst older investors, there's some that love just to have that paper. They like to have the paper in their fingers. They like to read. But yeah, let's see. Cage battles within sectors sounds like real fun. Yeah, absolutely. I mean, we'll figure something out. We'll definitely figure something out. You know, it's something. I really loved the idea of the battles, and I was sad that they weren't working, to be honest. Ian says, I sold Royal Helium at 69 cents after owning them for a week. Got the tip from a guy at work. Then last week it showed up on Facebook. People in the comments were bots, I think. No response. Yeah, it's actually interesting. Apparently, when you look at web traffic, more than 50% of the people on the internet are bots. So AI has already pretty much conquered the internet. So interesting thing here. Jonathan says, if someone makes 100K per year now, should they invest? I think what annually in the RRSP exclusively, or split 50% RRSP and 50% TFSA. Okay, great question. So it's going to come down to a couple things. First of all, if your job has RRSP matching, you want to make sure that you're maxing that out, because anytime you're going to get free money added when you do a deposit, you want to make sure that you're getting that. Okay, so that's the first thing. The second thing is you have to look at your TFSA. If your TFSA does not have, like, if it's not even remotely close to being filled, then yeah, that's where you want your money going. So the only time you really should be using your RRSP is a couple, like for one, matching. If if your employer does RRSP matches up to a certain amount normally, so you'd want to use it for that. And the other time is if you need, let's say, for example, you had a year where you made a little bit more than you were anticipating, and you just don't want to pay all that extra tax. So you're looking at tax deferral in that case, putting it into your RRSP. The other option, of course, is if your TFSA is completely full. Well, then, yeah, your RRSP is definitely an interesting option. And then one other little consideration as well is when you're investing in higher dividend US stocks, if you put it in your TFSA, you're losing 15% withholding tax on it. But if you do put it into your RRSP, you don't lose that 15%. So you get all of that, you get all of your dividends. But keep in mind, eventually, when that money comes out of your RRSP, it's going to all get taxed. So you're kind of like, it's like for now, you're avoiding paying 15% to pay 100% later. So just something to keep in mind. Because a lot of times people are like, okay, yeah, this just avoids taxes. It doesn't. It just prevents you from paying 15% to the IRS, but you're now going to pay 100% to the CRA eventually when you pull money out of that RRSP. Now, the good thing about that is that if you are doing this in retirement, you should be making a lot less money, which means you're not going to be paying it. Your marginal tax rate's going to be lower, and that's kind of a good thing. All right. Patricia says, yep, AQN is the worst. I don't think they could go lower. I'll be selling this week. I had enough. Yeah. Yeah, I know. I did not. This one surprised me. I was like, really? Can they absolutely go any lower? Um, I was shocked. I was definitely shocked. Um, and the funny thing is, you're looking at how low they are now and you're thinking to yourself, there's no way they can go any lower. So there are people who are saying, okay, it's time to start stocking up. But we've played this game before. Every time we think they can't go lower, they find a way. So I'm at the point that I think they're just too risky. Now, mind you, that business, it is a heavy regulated business, but their management, the fact that they keep on selling assets just to try to get things back under control, it feels like a sinking ship. It feels like a sinking ship, and they've just handed everybody some scoops to say, "Come on, scoop the water out. We'll be fine." Yeah, I don't think I can promote AQN at all at this point. I don't think I can be positive about them because they have fallen. They keep on disappointing us over and over and over again, which is too bad because I know even go back 2-3 years and AQN was a favorite. People loved AQN, but boy have they fallen. Boy have they fallen. Jonathan says, thanks. Love the channel. Well, thank you, Jonathan. I'm glad that you're here, and I'm glad you love the channel. I do my best. I certainly do my best. Jonathan says, AQN diluted their shareholders for a decade. Shareholders bid up the price while operating earnings stood still. Yeah, and that's one of the things with dilution. If you noticed, I think it was my last deep dive, I did add to the debt section. I've added a little thing on dilution. So anytime I see any amount of significant dilution, I'm going to throw that into those deep dives as well, so you guys can sort of see what's going on. So basically, just in case, because some people are like, "Oh, dilution. What's dilution?" Well, think of it. It's basically exactly what it sounds like. So if you dilute something with water, right, you add more water and it becomes less. It's the same idea. Basically, what they do is they create more stocks out of nothing. Hence, when they create and manufacture stocks, what ends up happening is all of the stocks that you hold are not, they're worth a little less. They're worth a little less because they get diluted. So that's kind of why dilution is a big thing. All right. So I know with Scotiabank, because that was the last one, I believe their dilution was it 2.3%? It was either 2.3 or 2.6. I think it was 2.3. Actually, I mean, I can pull it up. I'm kind of like, I hate guessing. I hate guessing. Let's see here. Do I even have them up? Oh man, I saved them. I thought I had them I still had them up, but I don't. Anyway, at the end of that video, it's 2 point something. All right. Do you think CNR will drop on the latest news? So, one of the big things going on, and we have this in our news, so this is coming up here. But we're going to talk a little bit about the potential strikes. So, yeah, strikes. It could. I don't think it's going to hurt them long term. I don't think they're going to be long strikes because if both CN and CP go on strike, so basically we're looking at the workers. We're going to get into a situation where that is so bad for the Canadian supply chain that the government will probably step in. There will be huge pressure to get this resolved fast. So I can't see it going on for very long. All right. Yeah, and that's what I'm saying. Max out the TFSA first 100%, unless you got that matching. Remember, if your employer is like, hey, we'll put $5,000 into your RRSP every year if you put 5,000 in. Well, then yeah, you want to put 5,000 in. So but It's hard to say. Like, I don't know how many employers still do matching, but there are still some out there for sure. So yeah, absolutely. Get the TFSA filled up. Get that filled up for sure. Kawachin Technology Tutor says, Jonathan, TFSA is the best vehicle by far to invest in. Yep, absolutely. Prairie says, I do not receive any of those emails from Wealthsimple. It was a question I answered no to at sign up. Oh, so maybe there's something within Wealthsimple you can go to as well. I don't know where that is, Vic, but if you were to call them up, I bet you they could turn it off then for you. Oh, and here we go. Prairie says you can turn it off in the settings, notifications, shareholder materials. There you go. There you go. Perfect. That's why I love this community. Somebody always has the answer. Somebody always does. Ian says, I maxed out the TFSA first, then the RRSP. Then I filled up my non-registered with eligible dividends. I reinvest my dividends into my RRSP. I gain a bit of room every month from work, hoping for a tax refund. Yeah. Oh, that's always a good thing to look for a tax refund. And the other big thing too is once you max your TFSA, don't forget every single January you get some new space. So you always want to be aware of that so you can get that filled up when the new year comes along. 9 says, if you make a super high income RRSP, can be good to contribute even if the TFSA isn't maxed. Yeah, I mean, once again, it really depends on what you're doing. I look at it this way. One of the things that I believe in is that when you get to that point of retirement, one of the things, if you're looking at, it depends on your strategy, but if you're really looking to have that high income TFSA, then that becomes a huge, huge priority. Whereas if you're in that situation where, where you don't want to, you kind of need some supports. You also don't want to generate a whole ton of income. Eventually, that RRSP, it's going to get to a point where it changes into an RRIF. And that is the latest you can push that off to is the end of your 71st year. At that point, then each year you're forced to take more and more money. And that can certainly affect things at that point. The big concern, though, and this is kind of like why the whole RRSP meltdown strategy is pretty popular. One of the big concerns is that if you really, really fill up that RRSP and then something happens to you and you don't have a spouse, if you have a spouse, it can roll over into them. But if you don't have a spouse, you end up paying a lot of taxes. Even if you do have a beneficiary, it still gets fully taxed at your marginal tax rate. And that, and if it's let's say you've got 300,000 sitting in your RRSP, that's going to be pretty much, most of that's going to be taxed at a very high rate. So it's kind of one of those things that you have to sort of look at the math, look at how you can play it out. So that way there you can, for one, the stuff coming into your TFSA, fantastic, is all tax free. And even if you pass on your TFSA, it doesn't get hit tax wise as badly as the RRSP. So just things to keep in mind. But there's a lot of different strategies out there. There's a lot of different ways you can do it. I always say, do the math, break it down, look at what you're going to get. And you could even sort of theoretically come up with a couple different scenarios, play the numbers, see what works for, your retirement style and what you're planning and what your goals are in retirement. All right. Ian says, I made $4 on AQN on Friday. That's right. Yeah, I was it. Yeah, I think Ian was messaging me about that. So there you go, $4. Nothing wrong with that. The fall of AQN shows there's no such thing as a risk-free stock. No, it can happen to any stock. I mean, you can take any blue chip stock. They can fail. They're not 100% guaranteed. And that's one of the reasons, if you think about it, why diversification is so important. Because sometimes the unfailable can fail. It happens. And also, I mean, you take an ETF, and this is one of those reasons. So I have people who say, well, okay, something like XCQT, it has all the diversification I want. So I'm only investing in that one ETF. Fantastic. That's a great investment. But you are in a much riskier situation than someone who's spread it around. Because if something were to happen, if something were to happen to your management company, I think, let's see, I think that one is iShares. Then, you know, let's say the unsinkable iShares happens to sink. Then, that could be a bad thing for you. It could be. It's hard to say. Now, there's going to be insurance and there'd be a lot. And iShares, I mean, I can't see that happening, but the chance is not 0%. It's never 0%. So if the chance, for example, let's say every company has a 1% chance of crashing or of completely going out of business. If that's the case, and you have that's the only company you're in, and that 1% comes up, oh boy, you're in trouble. Whereas if you've got 50 companies, let's just say, or we'll say 25, you got 25 stocks, and they all have a 1% chance of that coming up. Then if that stock does have a bad day, that 1% is it's only 124, it's sorry, 125th of your portfolio. You're not crippled. It hurts, sure, but you're fine. So that's kind of why diversification is kind of good. Even when you're dealing with blue chip, it can happen. There's been some huge companies that were as blue chip as they can be that people thought would never fail. Do you remember hearing of a company called Nortel? Just think about it. Just think about it. Nortel. Funny Book says, it would be interesting if you looked at these older videos and compare it to the stock today. I don't know if you did an AQN video years ago, but that would be interesting. Then and Now series. Well, that's not a bad idea. I believe I've got 2 videos on AQN. Like I did before AQN had the first dividend cut. I did a video, and I actually in the video said it wouldn't surprise me if they cut the dividend. So yeah, it'd be interesting to look at sort of here and now type things. Even Jill has occasionally suggested that it might be fun someday to like watch one of my first videos and do a reaction to it. I'd be like, oh boy, I'd be like beet red. I'd be making fun of myself through the whole thing because it's a thing. Like your first 100 videos on YouTube are gonna suck. That's just the way it works. But that's because that's you learning, figuring out what works, getting more comfortable with the camera, all of that fun stuff. So yeah, but that would be kind of fun too. Bismarcky says, just check Wealthsimple and Wealthsimple. Just checked Wealthsimple, and disclaimer says a company may be required by law to send out documents. Okay. In some cases, that could be the case. If it is a law, but I can't see why they shouldn't be able to just email you documents. I mean, we're trying to not waste so much paper. All right. Ian says, going to sell 7K worth of stock in my non-registered and deposit my TFSA in January. Probably pick a stock I'm down on for tax loss harvesting. That's smart. That is smart. Then buy back in my TFSA. Nice. I like that. And it's kind of interesting because technically what Ian is doing is it's not even like he's selling it in a way. In a way, he's kind of like he's transferring it, to his TFSA. But because he has to sell it and buy it, what that does is that creates that fake loss. That he can then use to write off against some gains. And that's kind of that neat scenario too, because normally if you do a tax loss harvesting and then you buy something and you're non-registered, well, eventually that other thing you buy goes up because you're normally buying something on, in a similar area. You're usually going for a sideways move. And then when that goes up, you still end up paying the taxes. But by using the TFSA that way, that's a loophole where you can get a free tax loss harvesting without any future ramifications of it. So that's not too shabby at all. Kowalchin says, always good to invest in RRSP to drop yourself to the next tax margin amount if it works like that. Well, it does, but you got to keep in mind, right? When you move up tax levels, So let's say, for example, and I don't know where the exact numbers are, but let's say there's a tax a level at right at 100,000. And I know it's much lower than that, but let's just say it was at 100,000. You go up, you jump up significantly in how much you're going to pay. Well, if you make 101,000, it doesn't, that new rate doesn't go on all 101,000. It only goes on the one, on that 1,000 that's above it. So that's just something to keep in mind. So on that 1,000, you're going to pay a really high rate because you've moved that into that next level. So what you would do with an RRSP is you're like, okay, well, I'm not going to pay that crazy rate on that 1,000. I'll move that into my RRSP. And, after I retired, I'll pull that 1,000 out then, and I'll probably be paying a much lower rate even than my normal marginal rate. So that's kind of a good way to sort of look at it when you're looking at it. I know I've seen people, and I've actually watched a YouTube video where somebody was saying that, oh yeah, you just you go up by you cross that line by $10 and it costs you thousands of dollars in taxes because they tax everything. It's like no, they don't. That's not how it works. But some people, I think, are just a little bit confused, I think, with how taxes work, unfortunately. And considering we all pay taxes, that it boggles my mind that they don't teach that in school. It really boggles my mind. Ian says, if I have any room in my RRSP, I will sell in my non-registered to top it up in January as well. Okay, fair enough. Spike wants to know, what percentage of cash should you have? That's a good question. So when we're talking fixed income, there's rules out there. There's a lot of different rules as to how much fixed income you really should have. I always look at it this way. I don't see it as being as important as it used to be. So, and one of the reasons I think for that is, so what I use is right now I'm using Cash. So that is a cash.to. It is a cash ETF. So basically it maintains its value of $50, but it pays me a dividend, just shy of 5%. So that keeps coming. So that's where I park my cash when I want to park it. There's other ones as well, like PSA and a few others as well that you can use for that purpose. And for me, what I like is I try to maintain a certain amount of cash position, and it's not to create stability in my portfolio, because that's used to be the way old school investing. They would be looking at fixed asset as being a hugely important thing. I think it can still be an important thing. Like, for example, right now, if you're looking at treasury bonds or a treasury bond ETF, as rate cuts hit the system and interest rates go down, they have an inverse relationship. So when the interest rates come down, the value go up on those treasury bonds. So that's something that some people will look at. But keep in mind, it's not that the interest though. So there's a thing called a coupon, which is basically the amount that's paid back. So the coupon on new bonds goes down. They stays the same on the old ones because they're locked in. But it's kind of a play that you can make to sort of ride the interest wave. I don't want to call it a boat, but you can use it to ride interest waves. So that's kind of cool in that sense. But I think when it boils down to exactly how much you should have, it really depends on a lot of things. One, what is your function? What are you trying to do with your portfolio? What is your risk level? Now, if you're an ultra conservative and you have a very small risk level, you're probably going to have a higher cash percentage than somebody who has a healthy risk level and they're like, I just want to create income. That person is going to probably not be investing in a lot of cash ETFs, but or in a lot of fixed income. But I think that there are other ways to create stability in your portfolio. For example, if you if you want to invest in like some commodities, for example, gold tends to be a good hedge against I don't want to say a hedge against inflation, though it is. It's also a hedge against turmoil in the world. So it's one of those things that can help create a bit more stability. And also keep in mind too, that percentage of cash, your cash position, that should change. You shouldn't just say, okay, I'm going to have 10% cash and I'm going to sit at 10% cash. Well, no, because if times are good and the economy is doing well, we're in a nice bear market. We're in a nice bull market. you probably don't maintain as much cash. Now, if things are starting to look bad and if the economy is falling apart, kind of like it is now, but even though we are in a bull market, then you might be sitting back and say, okay, well, I think I will start to increase that a little bit. And a lot of times it comes with, you could probably draw a correlation between the fear index and how much of a cash position people have on average. So it's just something to keep in mind. If you can either use it functionally, kind of like how I do, where I've got things parked in cash that if, let's say, for example, the market were to have a big crash and a big correction, and we haven't had the size of a correction I'm looking for yet, then I'll pull that money out of the cash. I can switch that immediately and I can buy, I can buy whatever my target is if we have a really deep dip. But right now, I haven't seen anything that really wants me to pull anything out of the cash at this point. But it does boil down to sort of go with what you're comfortable with. When things are looking rough and you think the market is going to do bad, well, then you may want to start increasing that cash position. And some people will, for example, when the market's starting to falter, they still have a few stocks that are doing really, really good. Some people will start to actually pull some of those profits off and throw that into cash. Once again, that is entirely up to you, and it's going to be mostly about your own personal risk level and how you feel the market is going. So in a case like that, I definitely say as much information, as much news as you can digest, as much as you can learn on the way is not a bad thing. Is not a bad thing at all. Oh my gosh, we haven't even started the news yet, guys. That's because you guys have just been crazy. But that's a good thing. OM says, XEQT is my biggest holding in my TFSA, like 30%. Yeah. See, 30%, I think that's a reasonable amount. And this is the thing, I always want to make sure, because a lot of people who love XEQT, it's almost like a religion. They get very loyal to it. I'm only that person that says 100% is not comfortable for my risk tolerances, because I do love to diversify a bit more than that. Actually, my risk tolerance is I don't like to have more than 10% in any one. 5% in a single company, 10% in a company that has multiple companies underneath it. So like Brookfield Asset Management or Canoe. Just sort of put that out there. But, it really boils down to your own personal risk profile. We all have a risk profile. Mine is a little more conservative than I know a lot of people's are, and that's fine. That is absolutely fine. Ian says, if you are asking me what percentage of cash I have, it's around 2.5 to 3%. Yeah, that's probably, I think a lot of people are in that vicinity. 9 says, that's why I like stock buybacks, opposite of share dilution. Yeah. That is not a bad thing at all. All right. After Jonathan, we're going to do the first news story. Got to get that out of the way. I bought $1,000 worth of FBTC in my TFSA, which is a Bitcoin ETF. Any opinion on Bitcoin and its future? I'm going to just hold that amount for 10 years and see what happens. I think you'll probably be happy with that amount in 10 years for sure. My thoughts, we've had a halving. And normally normally anywhere from 3 to 5 months or so after a halving, that's when we start to get a real increase in the price, because you got to look at it. The halving has made it so that anybody who's mining Bitcoin, they're doing the same amount of work, but they're getting half the amount of Bitcoin. So that's huge. That should be driving that price up big time. Because I'll tell you right now, a lot of people who are miners, they're like going, we can't afford this anymore. So that price does have to go up. And I know there's a shortage out there. There's only so much Bitcoin. And I'm actually surprised right now that it has been struggling as much as it has. So I do think that's a good buy. Like if you're looking at 10 years, I think that's a no-brainer. Because you got to look at it. A lot of the volatility we see now it's more short-term volatility. So I think 10 years Bitcoin will absolutely be fine. All right. Holy banana bread. All right. Let's get to our first news story. All right. So we had Canadian jobs data that popped out this week. So our unemployment rate, this is one of the ones that we were concerned about. So It is still at 6.4%. It did not change. That's fantastic. We were expecting 6.4. We got 6.4. Now, when it comes to jobs, we were actually expecting to have shed a lot of jobs. We're expecting to shed about 5,000 jobs. We shed 2,800. So, once again, we did lose, but we didn't lose as bad as we were anticipating. Wage growth, and this is one of the ones that I think is annoying the Bank of Canada quite a bit. So we were expecting it to come in at 6%. It did come in at 5.2%, but that's still pretty high. So I think right now, it's kind of one of those things the Bank of Canada wants to see wages come down because they're always worried about that wage price spiral thing. I don't think it's a big issue right now, but there was one thing really interesting in here. So we actually gained 61.6 thousand, so 61,600 full-time jobs. All of the jobs that we lost were part-time. So with part-time, we lost 64,400. So we're losing part-time jobs and gaining full-time jobs, which is different because it's normally the opposite of that. Now, part of the reason, of course, is we're starting to head out of the summer, and a lot of those part-time jobs that students traditionally take, a lot of those are disappearing. So that does make a little bit of sense. But I thought it was still interesting. But overall, with students, they did not have a great summer. So if you look at students between the ages of 15 and 24 who are returning to school in the fall, 51.3% of them were employed last month. So that's down pretty much about 6.8% from the previous year. So that's big. That's definitely big. Statistics Canada says that the lowest employment rate for returning students since July of 1997, other than July of 2020, because we had a pandemic and people weren't allowed to leave their house. So yeah, it's kind of interesting. So the slowdown in the Canadian market, it has been particularly felt as well by a lot of the recent immigrants. Their unemployment rate has climbed 3.1% all the way up to 12.6%. So that's huge. That's a lot. By comparison, the unemployment rate for people who are born in Canada only rose by 0.5% over the last year to 5.6% in July. So new immigrants are definitely taking a brunt of this. It's one of the other reasons that, when I always say that I think our immigration is too high, and I understand why we're doing it, but we want to have jobs in place. There's nothing worse than coming to a new country and you can't even get a job or a house. To me, that's terrible. I say get these in place, then bring in as many immigrants as we can support in that way. Also, I mean, considering the fact that we're not hitting the fertility rates numbers that we need, we definitely need a strong immigration. But we got to get them houses built. We got to get that economy working. We got to get those jobs out there for people. Oh boy. All right. Yeah. And I guess the worst place right now is if you are a recent immigrant and you're young, they have a jobless rate of 22.8%. So that's up 8.6 points from a year ago. Wow. That's pretty big. That's pretty big for sure. So I don't know. Now, these job numbers weren't great. They weren't fantastic. So anybody who's thinking about a September rate cut, I don't think these job numbers work for or against it. I think they were kind of more sort of in the middle, not that big of a catalyst. But what will be is probably what the U.S. ends up doing. And we've also got some CPI that's due to come out as well. So we got a lot of things yet to come. So let's grab a couple more of these comments before we get to the next news story. 9 says, I use my cash interest to DCA into stock and fixed income ETFs. Nice, nice. Babek says, what are your thoughts on Enbridge? Sell at 52 weeks high. So Enbridge, once again, it's a utility company. Now, utility companies, they have struggled because of, high debt. And all of the high rates on that high debt has led to a lot of servicing. Now, when you think about that, we're now at a point where the rates are coming down. that is helping utilities. So Enbridge, I don't think they're done. I think they're still going to go up higher. So you have to take that into consideration. It doesn't hurt to take profits, but I do think they're going to go higher. We've already started to see that within the utility sector, except for that one outlier, that AQN. Oh boy. Let's see. Prairie says, I try to adhere to 5% per asset, 20% per sector. My position in CNR is the exception to the rule. Okay. Well, CNR, I think, is a great, I think that's a great, it's definitely a great company. To me, it's actually one of my favorite stocks. So CNR just asked the government to enforce binding arbitration. Yeah. And I think the government will definitely have motivation to do that, because we don't want that impact on the railroad. Now, speaking of the railroad, since we're starting to talk about it, let me jump to the next news story. Look at that. There we go. Now we have CN. So both CNR and CPKC, they are looking at potential strikes. So the unionized rail workers for both companies have been threatening to go on strike for, well, months, to be honest. Unfortunately, the case seems to be the same for both sets of neighbors, as they are negotiations are just not going well. So back in May, workers for both were ready to strike, but the labor ministry, so the government did step in at that point. They stepped in and they said that they can't go on strike yet. They need to wait for them to make some assessments as to which rail shipments are considered vital to national health, which means that those particular shipments are not allowed to be shut down. So we can't have a full shutdown. There are going to be some that once the government report comes in. Now, this government report was expected to be released on Friday. I have not yet seen it. So I don't know if it was released yet on Friday, but it's coming out either it came out on Friday, or it's going to come out probably Monday, Tuesday. At that point, the workers then have to vote to reauthorize a strike. And then once they've done that, they do have to give 72 hours notice for that. So right now, the CEO of Canadian National Railway, they're expecting the strike to happen around the end of, I was going to say October, but August, the end of August, this month. And yeah, here's the worst thing about that. So the fall is the busiest shipping season for the railways, and it would be a huge blow to our supply chain. So even if they're still shipping some things that are considered vital to national health, this is still something we don't want to see. Because you remember some of that inflation we had initially was supply chain related. We don't want to get into that situation again. And I know the government doesn't want to get into that situation again. So there is a lot of motive out there for there to not be a strike. And I think if it comes to binding arbitration, I think the government will do it. I think they will. So we'll have to see. I'd be surprised if they didn't. But then again, sometimes the current government does things that don't make the most sense. Sometimes. Okay. So yeah, you're not sure what that means. So basically, what that means is they bring in basically a negotiator who will sit down with them and work with the deals, and they will come up with a solution that both sides have no choice but to take. So that's why they call it binding arbitration. So I don't know how long that would take, but I don't think they. I think it's something that could very well happen. So obviously, if CN and CP can come to collective agreements with both of their groups, both of their unions, that would probably be better for both of them for sure. But we'll have to see. Are you all doing your part for the fertility rate? Get on it. There you go. All right. Next week, you guys report back in for Skiz and let them know. Let them know how many babies are coming. Oh boy. Mary says, hit the like button. Yeah, absolutely. And while you guys are hitting the like button, I'm going to have some coffee. So, oh gosh, that's so good. I love it. All right. Let's see here. Kawishan, do you think CNR is a good stock? Then buy. Don't try to pick the bottom. It's hard. Yeah, it is very hard. both CNR and CP, both of them are really good companies. I mean, they both have advantages. So CNR, they have access to a lot of our north. So up the Canadian north, a lot of where all of our mining and things like that are happening. That's a big part of their supply chain, bringing those minerals and ore and everything else from the north, and also oil to a certain extent. They bring a lot of that. Now, CNR, they do have tracks that go all the way to the Gulf of Mexico. So they do have a very extensive route in the US as well. But switching over to CP, so with CP Rail or CP Kansas City, they have a contiguous railway that crosses Canada, the United States, and goes into Mexico. They're the only railroad that does that. So that's pretty big and extensive as well, and that's a huge plus for them. But just going back to CNR for a while, if I remember correctly, I think they're like the second largest in the world. I mean, they're a massive railroad. So, it just keeps in mind that I think both of them have their strengths. I think both of them, a lot of times people say, which one should I get? It's like, get whichever one you like. They're both gonna be fine. I think CP will probably be a better investment shorter to midterm, but I think long term, I think you can't beat CNR. But you gotta go with what you like as an investor. Let's see. But I like bottoms. There we go. All right. Well, we'll get to our next story. We're getting through these stories slowly. This is kind of an odd story, but Samsung has a bit of a fire problem. So they are recalling 1 million stoves that are apparently so easy to turn on that even your pets can do it. That's crazy if you ask me. So the problem is the knobs on some of their electric stoves. They can be turned on simply by a pet bumping into the knob, or a human bumping into the knob would also do it as well. So there have been several videos of, or actually on YouTube, I looked for one of them. There was a video of a dog in Colorado, and they set a house fire in June by just bumping the button. And the person had like a bunch of cardboard and stuff sitting on top of their stove, so combustibles. And that was enough. That caused a massive fire. So it's kind of not a good thing. So the Consumer Product Safety Commission, they said that it is aware of incidents where houses burned, and some people have died from house fires started by range knobs accidentally turned on, whether from people bumping into them or pets. The issue affects both gas and electric ranges. Now, obviously, Samsung doesn't have the gas ones. They just have the electric. And as far as I know, well, Samsung said that they've received more than 300 reports of accidental activation by pets. And they said it's resulted in 250 fires. At least 18 of those fires caused extensive property damage. There have also been 40 injuries, 8 of which required medical attention. And 7 of those fires have led to pet deaths. So, yeah, it's kind of crazy. Gosh, I'm looking at things like that, and I'm like, this is the type of thing. Now, what they're doing on this recall is apparently they have this new safety thing that you can put on the knob to prevent it from happening. So that's kind of what they're looking at doing. Oh, good old Samsung. Good old Samsung. To me, it's just crazy that a pet could do that. So one of the things is that, if you have a stove that has a knob, or is any stove really, you shouldn't be leaving combustible things on your stove. Don't throw newspapers on it. Don't throw paper on it. Don't throw boxes on it. Keep it clean, just in case something does happen. Makes a lot of sense. And you know what? A little bit of care now can save you from losing your home. That's for sure. Bismarcky says, I know a lot of people who probably couldn't turn on a stove. Well, maybe. There's definitely people like that. Let's see. Appreciate your analysis and time. Oh, no problem. No problem. And Prairie says, cardboard boxes do not belong on a stove. Pots and pans do. Yeah, exactly. It's just one of those things. It's one of those things. And especially you get some of these newer stoves, like some of these electric ones where it's a nice, perfectly flat surface and you just got like a circle to let you know where the burner is. They can be hugely dangerous. Even after you're finished on a stove like that, after you're finished using it, if you take the pot or pan off of that burner and you're not paying attention and one of your cats jumps up and walks across it, they can get a pretty serious burn. So definitely something to be paying attention to. All right. Oh, we're finally getting through the news. I'm loving it. Um, so we got a story about foreign workers. So it's kind of interesting. The government has been saying, we're going to limit the number of foreign workers coming into Canada because they're taking away jobs from Canadians and, we need our people to be working, all of that stuff. So apparently they're cracking down on it. Well, this story is telling us the opposite. So employers in Canada have recruited record numbers of low-wage foreign workers this year. Despite that government push to lower the numbers. So according to Employment and Social Development Canada, employers got approval from the feds to hire 28,730 people through the low-wage stream of the TFW program in the first quarter of this year. So that's actually up 25% from the same period in 2023. I guess somebody forgot to carry a number on the government when they're figuring out how this works. Overall approvals were up by 13%. And year to date, we've brought in 71,000 foreign workers. It's kind of interesting. So with unemployment up, you would really expect it to be harder for people because you have to prove that there isn't a Canadian who can do the job. Well, with a whole bunch of people without jobs, you would think that would be harder to prove, but apparently not. Now, as of course, criticism has been growing over this, employers abusing the program, Canada's temporary foreign worker program, the federal government is considering banning entire industries from hiring low-wage foreign workers. So that's their goal. I mean, I'm not opposed. Depending on where it is, there are places like, especially when it comes to harvests, where for whatever, no matter how hard you try, you can't get a lot of Canadians to come in and do it. So in cases like that, yeah, absolutely. Bring in the foreign workers. Let's at least, let's not get to a point that nobody's doing the job. But at the same time, we do have a lot of people. If you remember, we have a lot of new immigrants who need jobs. But the problem is, once somebody has immigrated to Canada, you're not going to be able to pay them those low wages. So, that's where these employers are going to have to open their pocketbooks a little bit, pay people what they're worth, all of that fun stuff. All right. So we've been talking a little bit about EVs and Chinese EVs, and there's been a lot of move towards getting a tariff put on there. And I know even just the other day, Polyev was saying, yeah, if once he's in, he'll make sure it's 100% tariff. So we still don't have official one in there yet. But with some of these potential tariffs, you would think that would deter Chinese sellers, but not so. So BYD, they have said, we're still looking to sell in Canada, even if they drop 100% tariff. So, with that 100% tariff, you're looking at 100% tax on these EVs. But here's the thing. They're able to make the car for $10,000. So even if you double it to 20,000, that's not that expensive. And part of the reason they can do that is because they're coming out of China, they have cheap labor, and they also have some pretty heavy Chinese subsidies on them. So they can make them cars really, really, really cheap. And they can, even with that 100%, they can remain very competitive in the Canadian market. Now, the Canadian government, they are worried that a flood of Chinese EVs, they could be a threat to the billions that they have poured into establishing EV manufacturing hubs for Western automakers. So we're talking like Ford, Stellantis, Volkswagen. So we're looking at a kind of an interesting thing. We'll have to sort of see what the government's move is on this. Is 100% tariff enough? Or should we just sort of forget about it? I mean, I don't know. It's kind of one of those things. Like, here's the other thing too. I mean, as it is right now, I don't think we're even close to being ready electric grid wise to handle a lot of EV vehicles on the road. So when you look at some of the aggressive goals the government has, we really need to get our electrical grid in shape for that, because I don't think, even if we hit the targets that the current government wants us to hit, I don't think our electrical grid can handle it. So you look at places like, and I think I've heard a lot of complaints coming out of Quebec about this. So just something to keep in mind. All right. Oh, you guys are now quiet. That means I can get another news story done. I love it. Let's do that. All right. Whoops. We're almost done the news, guys. So hydrogen. So Canadian and German governments, they're basically taking that next step to launch Atlantic Canada's hydrogen export industry. So they recently announced a multi-million-dollar commitment for projects in Eastern Canada. So the Canadian government is going to chip in 300 million, and the German government's going to chip in 300 million as well for these projects. So the whole idea is that as Russia continues to withhold natural gas from Europe, a move into another energy source is critical, which is kind of funny because, Germany just got rid of all, started decommissioning their nuclear reactors. I'm like, oh my God, guys, you don't want to do that. You're putting all your cards on hydrogen. So definitely interesting. So right now, getting back to Canada, there's currently several projects in Newfoundland and Nova Scotia. They're in the early planning stages at this point. So the hydrogen technology, and this is kind of an interesting thing. So right now, it is an expensive technology. It's not very profitable yet. So part of the investment is going to be basically towards leveling the playing field in regards to the cost of that technology. And here's the whole thing. As the hydrogen market grows, as it gets bigger, as it develops, the cost curve is expected to come down, which will be good for the early adopters of the technology. So it is expected to come down to the point that profitability will eventually be inevitable. But there are some environmental groups, they're concerned. And it's actually interesting. They're concerned that all of the wind energy going into the hydrogen is not going towards helping Nova Scotia get off of coal power. So it's a fair point. It's a fair point. But I don't know. Maybe Nova Scotia needs a nuclear reactor. It's just one of those things. Like Nova Scotia, Nova Scotia can handle a nuclear reactor. You got hurricanes, but put it in, inland. Maybe put it in Annapolis Valley or something. But just a thought. All right, and we'll just get this last story out of the way here very quickly. Good old Costco. They have decided to crack down on memberships. So they have a plan. Basically, they call them membership moochers, people who sort of sneak in with other people's cards. They have a plan to stop this from happening. So what they're looking to do is they want to implement a scan-in system where you'll be required to have your card scanned before you can even enter the store. If your card does not have a photo ID on it, you'll also need to present that as well as your card. So it's kind of interesting. Now, apparently, if you go to their customer service, they can take your picture and put it on the card for you. So that way there you have a little bit less of a hassle, but they're putting it down. And it's really interesting that right now, this whole crackdown is coming right after they announced that membership fees are going up in starting September 1st. I think they're going up about $5. So, correct me if I'm wrong. Anybody who has a membership and knows, I believe it's $5. So going up. Now, members will still be permitted to bring a guest with them or a helper to help them. But it's one of those things. Like, I know when I went to Costco with my mom a few times, one of the interesting things, sometimes the cashier would be like, oh, well, you should get a card too. And I'm like, why do I want to get a card? Because at the time I was living with my mom. This is my mom. We live in the same household. But yeah, they get a little bit interesting. So I don't know. There are some good deals at Costco, but it'd be interesting to do, actually really interesting if somebody would do a statistical analysis on how much you actually save versus that Costco membership. And is it really worth it? Because you also have to keep in mind, a lot of times these Costco warehouses are pretty far off the beaten path. So, you got to throw all that gas in there too. Just something to keep in mind. All right. Whew. That's the news. That's the news. I love it. All right. Now we can actually, just before I do that, I'm just going to quickly tell you guys what's going on next week. So in Canada, we don't got a lot happening. So it's actually a pretty slow event week. But in the US, though, oh boy, the US, we got 3 big reports coming out. We got PPI coming out on Tuesday, CPI coming out on Wednesday, and these will be crucial to whether or not we get that September rate hike. Also, retail sales reports are dropping on Thursday. Not a lot going on earnings-wise this week. We do have Barrick Gold, Sun Life Financial, Hydro One, Metro, just amongst a few that are going to be dropping their earnings reports. The big one we're all waiting for on the U.S. side is NVIDIA. That's still towards the end of the month, August 28th, they'll be dropping that one. So that will be fun. All right. All right, give me a second here. Let's get rid of the news. Bang. The news is gone. And give me 1 second here. I'm going to get me back to full screen. There we go. All right. Awesome. Awesome, awesome, awesome. All right, let's get caught up with the chat. Let's get caught up. Ian says 600 million. Don't get a lot of industrial infrastructures built for that. No, it's as I said before, it's more of an equalization. Sort of think of it as just here's some money to help lower the price a little bit. It's kind of interesting. Ian says, guy at work had his wife wait 2 hours at Costco because they misspelled her name on her card. Oh my, yikes. But yeah, they can do that. They can certainly do that. 9 says, I just shop with a family member who has a Costco card. They pay for my stuff, then I pay them cash after. Yeah, exactly. That works. That works big time. And Vic is going to hit the road. All right, Vic, you're always driving. You're always driving. All right. Well, take care. Take care, Vic. Kawichin says, depends on the times. A lot of time I can buy at supermarkets locally or less than Costco. Yeah, exactly. There's definitely different things that you can do. It's kind of one of those things. And also, I mean, I look at it this way. I don't know if you guys have been noticing this, but I find a lot of things that I buy now are going bad much faster than they used to. Like bread. I cannot tell you in the last year how many almost full loaves of bread I've had to throw out because they just went completely moldy really fast. So it's kind of interesting. And I'm kind of like, and a lot of times it's with the cheaper bread. And I told Jill, I said, look, Jill, every time we buy the cheaper bread, it goes moldy. Let's just buy the slightly more expensive bread and not have as much mold. But it's been interesting. It's definitely been interesting for sure. So just something to keep in mind. All right. Now, give me a second here. All right. There was one thing I wanted. I do now have the full screen, by the way. Whoops. Oh, look at that. There's a part of the script for, let's get over here. That was part of the script for the video that I filmed today. There we go. 9 says, I try to freeze my bread pretty quickly. Or pretty quick. Yeah, that makes sense. It makes sense. It certainly helps. I mean, we do freeze it, but this is usually that one loaf that comes out. It's almost like as soon as we pull a loaf out of the freezer and it's it's thawed, you got to sort of like say, okay, only have sandwiches for the next few days so that we can get through some of that bread quickly so it doesn't go bad. Let's see. What stocks would you recommend for a bit higher yields and steady price appreciation? Oh boy. Right now, there's been, and I've brought this up before, but I'll show you again. This is kind of my favorite stock of the moment right now is Armax. All right, so this here is the Hamilton REITs Yield Maximizer. This here to me is a midterm play. It's not a long-term play. It might be if you were into, if you're looking for a whole bunch of income. So what this here is doing right now, it's got a huge yield, so 9.321%. It's a monthly 13.5 cents per share. Now, they launched at $16. And, well, we'll just go to 6 months here so you can sort of see. So they launched at $16. And right now they're sitting at $17.38. So they're doing fantastic. They're doing absolutely fantastic. I actually just received my first dividend from them, so I'm happy about that. But the reason I'm liking this is twofold. First of all, let's go. I'm just going to bring up Google here. RMAX ETF. Hamilton. Here we go. All right. There's a couple of reasons that I really, really like this. One is not so much with, am I in? Oh, I'm in FMAX, aren't I? Oh, I don't want FMAX. I want RMAX. Did I don't know why I clicked on, there we go. I was in the wrong one. I'm like, wait a minute. They shouldn't hold any Visa. All right. This is the one I'm looking for here. All right. Now, this is what I'm liking. So you'll notice right now, their geographical allocation. They've got 50.4% in Canada, 49.6% in the United States. And it's all REITs. So this here is all absolute REITs. Like right now, their heaviest weighted are American Tower Corp and Crown Castle. So those are both American REITs. The REITs right now in the US are doing well. They have absolutely been owning it. So that is really helping this. Now, the REITs in Canada, well, they're all entangled in the all of the mortgage stuff, all of these higher interest rates that are out there, and rates are coming down. So this is all of a sudden lowering the servicing costs on the REITs, meaning that it frees up more money for REITs in Canada. We're gonna see some significant movement in the price of REITs, and I'll give you an example. Let's pick a Canadian REIT. We'll go with RioCan. REI. Here we go. RioCan. So right now they're sitting at $17.53. Let's just look at the last 6 months. So you can sort of see, as we were waiting for rate cuts, they've been coming down, but they have been moving back up. Don't mind this. The whole market fell a little bit right here, right? Because that was those couple of bad days that we had. But they are already starting to move in the right direction already with just a few rate cuts. So as we get into the significant amount of rate cuts, which will be in 2025, these Canadian ones, these Canadian REITs are going to respond well, especially ones that are like residential, industrial, maybe office REITs not as well, but this is going to be great. This is going to be good. So when we go back to this one, sorry, whoops, that's Parkland. Here we go. So when we come back here, right now we've got the US side. So over here, this is the US side. That's pumping really well. And the Canadian side is just revving up. So what that means is we're going to see some growth on this. Now, normally a lot of these covered call ETFs get released kind of at the top of the market. Good example. Let's actually give you a good example. Let's look at HYLD. All right. So here's HYLD. And we're going to go back. We'll go back 3 years. You can see here, it was released. And it started to do okay. But then what happened? We went into a bear market. Bang, right away. So you're at a point, if you bought in early on this one, you're pretty much, it's going to be a long time for you to make that up. Because you do have to realize that because you're looking at covered calls, there is a cap on the top potential. So for example, if this were to explode, like if their underlying assets absolutely exploded, you're not going to get all of that growth in here. You're going to lose some of it because what happens is when you're writing options on it, at certain strike points where all of a sudden the stock does well, it hits a strike point, you're forced to sell it at a huge profit for you, but you've now lost on some of that other profit. You'll buy back in and put out another option, but you have lost a little bit in there. So that's one of the reasons that normal stocks will tend to do better long-term than covered calls. You can argue, well, okay, but I'm still getting all my dividends. Yes, you are. But, if you get a giant pump and, you get knocked out of that pump because of options being sold, you can miss a good amount of that pump. So that's kind of one of the reasons for that. So here's how I'm kind of playing this. Right now, I'm expecting, all right, this is HYLD. Let's go back to RMAX. RMAX. All right, there we go. So what I'm kind of expecting here is I'm expecting something big from this company. So I'm expecting this to continue going up. So that's 1 year. Let's go to the 3-month for now, just to make it a little bit easier. I'm expecting to see some movement. I'm expecting to see a lot of movement. Once we start to get towards the end of the rate cut cycle, that's when I'm going to start to reevaluate things for the stock. But I think this is going to be one of them rare situations where you've got a covered call stock that you're going to be getting some half decent, almost 10% distribution yield. Now that, of course, as they keep going up, that number is going to come down because that's the way math works. So as we continue to go up, I will have an exit strategy for this covered call ETF. But in the meantime, I'm going to enjoy the dividends and I'm going to enjoy this pump and I'm going to pay attention. I've also got myself I have some RioCan and I also have Timber Creek Financial, which is also, they're not a REIT, but they are very much like a REIT. They're taxed the same way. So they're basically an unofficial REIT. That would be the best way to call them. TF, by the way, let's just pull them up. And we'll take a look at we'll just look at the last year. You can see that they have been doing really well. So they maintained this for a while. Then we had the bear market and they started to recover faster than most REITs. And they've done well. They were down at about 7. Now they're up at 783 and they're going to continue going up. Now, normally, if we go back about 10 years, normally they're usually up around $9 to $10. So I'm looking forward to seeing them getting back in there. I'll probably sell them at that point because then I don't think there's going to be a lot more upward momentum for them. But in the meantime, I've got an 8.812% monthly dividend while it's getting back up there. So we're talking about a pretty good total return stock for the midterm. Once they're back up there, then, keep in mind, once they're back up here, this 8% is going to be closer to a 6%. And that's going to be all. It'll just be a straight up 6% income type stock. You won't have as much upside. So, that's just kind of the way I'm looking at it. All right. Terry says bread nowadays sucks. Yep, that sure does. Lisa says, I freeze my bread too and take a few pieces out at a time. There we go. Possible rail strike in 2 weeks. I'm looking to buy a possible dip. Yeah, there definitely could be a dip on both lines too. That's what's kind of interesting. Prairie says, I freeze our bread as well. Thaw and keep it in the fridge until consumed. And that's probably a better idea, is to hold it in the fridge. But Lisa says, I'm up 50% on SIA REIT, and I've held it for less than 2 years. So SIA, let's take a look. So this is another REIT as well. So they're the Sienna Living. So Sienna Living, it's basically an old age. They have a bunch of old age homes. But let's look at them in the last year. Yeah, look at this. So it's kind of funny. I got some grief on this one. I'm going to go back here. So I did a deep dive on them. Somewhere's in this vicinity in here. And I said, I don't see things going well for them for a while. And that's exactly what happened. But I had some people saying, oh, but they're government subsidized. They're going to do well. How can you be mean to senior citizens? I'm like, wait a minute. I'm not being mean to senior citizens. I'm just saying I see rough time ahead. But that rough time has set them up for a good rebound now that we've got rate cuts on the book. And look at this. And they even started before. They basically, once we paused, things started to improve for Sienna. I would love to actually redo this one as a deep dive, because I think they're definitely doing well. Oh, I got somebody. If she comes out. So the kitten this week, she got her spayed. So she's still in recovery. She's wearing a little onesie. It's kind of cute, but she just went deep under the desk. I can't reach her where she's at. If she comes out, I'll bring her up and she can say hi. But I have a feeling she's gonna lay down in there. Yeah, and they also pay a great dividend. Yeah, let's take a look here. So 5.935%. So that's not too shabby as well. Sorry, I should have said distribution, not dividend. That's fine. That's fine. I find that people kind of get it, kind of use a lot of these words interchangeably. Because you take, for example, with Timber Creek Financial, it's actually considered interest. But, I still call it a dividend, even though it's interest. But keep in mind, interest is taxed differently than a dividend. So you always want to know what it is tax-wise. All right. JP said, I picked up some BTCY north of $7. So I've been a little disappointed watching the price lately. Are you still long BTCY? And would you recommend a hang on or cut bait and move on? I wouldn't recommend you cut bait right now. This is that time where we got a whole bunch of volatility right now. There's a whole bunch of stuff that's been happening. And it is really easy to cut bait. But we're moving into that point where I think we're going to start to see some bigger moves with Bitcoin. I think that it would be a mistake to sort of, especially if you're taking a loss right now, to cut bait. Now, right now, let me see here. I was just looking to see where is. Give me a second here. So yeah, so right now, Bitcoin has fallen a little bit on the weekend. And that's great. I'll tell you why. Because I sold somewhere up in here. And I'm looking to buy back in on Monday. So I'm hoping I'd love to see it go all the way down to 50. Heck, I'd love to see that. It won't go that low, but I'd love to see it. The lower it goes between now and open on Monday, the happier I'm going to be. But I am expecting things to look a lot better for it. So right now, if you're holding BTCY, and I do have BTCY in the 0 to 100K challenge, I would not sell it. I definitely would not sell it, especially right now, because I think, what is it priced at now? Like 6.5. Let me see. Or no, it's already down to 6. So 603. Yeah, I wouldn't take that loss. I would not take that loss. If you're at that point, like, let's just say you don't have as much belief in it as I do, what I would be more inclined to do is say, look, if you're thinking, I just want to get out, then I would probably put in maybe a sell limit on it for go with 725 at least. So you're making something. And then, don't just set it up as a single one-day expiry, put no expiry on it and just leave it be. That's if you're really upset with it. Now, because if you take that right now, you're losing $1 a share if you pretty much sell it at this point. So I highly, and actually that was closed on Friday. So when we look at it right now, 603 it's probably closer to 590 or something in that vicinity. So you take an even bigger loss. So I wouldn't take that loss. I really wouldn't. Abalash says, any chance Timber Creek can go under if property prices fall? I don't think so. I mean, part of the reason is that they're very well diversified. So they're not in any one particular city. So a lot of the property prices that we're seeing some downward movement are around Toronto, Vancouver. I think a lot of the rest of the country, they're still pretty high. And there's a lot of places where it's just supply and demand. And that's going to keep them from falling too much. So I don't have any fears. Like, when I fear about things when I go to bed, Timber Creek Financial suffering from property prices is not one of them. Yeah, usually I don't actually think I have fears when I go to bed, but just something to keep in mind. What happened to the price of XUS this week? Good question. I do not know. Let me take a look here. Whoops. Oh, I was playing with the logo, by the way, for something. Boom. Let's get back over here. What is that? XUB? All right. Let's take. XUS. XUS. There we go. All right. So we're looking here at the iShares. Oops. I went into the U version. I'll go into the regular one. XUS. Here we go. So we're looking at the iShares Core S&P 500 index. Fantastic. So it should be tracking what the S&P 500 is doing. So if we take a look, let's look at the last, we'll look at just the last 3 months. All right. Well, this kind of makes sense because, well, I'll show you why. Let's come over here and let's go to, whoops, all the way up here. Let's go to the S&P 500. And you'll see that little shape there, that little V thing. It'll look familiar here in a second. I just make sure I go to the right page. If you look at it, you'll see you got that same little V shape here. So it's just tracking what the S&P 500 is doing. So when the S&P 500 is down, this is going to go down. It's going to move very close. Like if they're doing their job right. If they're doing their job right, it should look almost the same. It should be, almost like a mirror image. It might be a little off in a couple of little places, but it should be close if they're doing their job right. So I wouldn't worry too much about this. As the S&P recovers again, because the S&P 500 traditionally is the 500 biggest companies in the United States. So, it's very much, there's a lot of blue chip in there. There's a few things that are probably not blue chip, but it is going to recover and it will have better days. Now, keep in mind, if we go further back, you can sort of see this is the trend. This is a little tiny blip. That's all this is a little blip. So I'm not too concerned about it. Now, if it were a situation, we'll go back further. We'll go back 5 years. So here is what could happen. This is the worst case scenario. Hello, bear market, bang. But look at that. Look at that. Compare it to this. Okay, you can see bear markets traditionally are typically much smaller than bull markets. So as you can see our recovery, even if this fell again, let's say it fell like that. Well, that's fine. That's fine. So if this here were 41, so we'll say, because that's where we are right now, roughly on this. So let's say we followed the same trajectory. Well, that means that, basically within a couple of years, we'd be back at 40. We'd be back at the 41 or 45, sorry. And then we'd be up and beyond. So this is the whole thing about time frame. And this is one thing that sometimes people have a hard time when it comes to investing. A lot of people look at it and they say, oh my God, it's just gone down. Well, yeah, that's what happens. That's the way stocks work. But if you have longer time frames, so for example, if I'm buying here back in 2021 and I've got a 3-year time frame or I got a 10-year time frame, I'm not worried about this. If anything, I'm just buying more as it's going down because it's going to basically pull my buying average down. I'm not going to be worried about it because look, it's going back up. If it's amount of time, right? Over time, and let's go to the 20-year. Over time, look at this. It goes up, up, up. Pandemic, up, up, up. There's a bear market, and then up, up, up. That's what it does. It's always moving up. This tends to be sometimes, we get bad bear markets. Heck, we've had, you can't really see. Unfortunately, this only goes back as far as 2013 because we're looking at XUS. So you can only see, but you can sort of see this is what happens, and this is the way the S&P 500 goes. So if we go back to the S&P 500, let's do that. Let's go back here. Whoops. Where is that's not what I'm looking for. Did I have it here? Oh, I had it here. There we go. So I'm going to take this and I'm going to come out to, I'll do it every 3 months. So these candles are now 3-month candles. Let me make it smaller so you can sort of see what's happening. So here you can sort of see, this is what happens. It moves like this. So right here, you do see this red, like you're thinking, oh gosh, what is this? Well, when does this? Oh, it's in 2008. Did anything big happen in 2008? Yep. We had a housing crisis. We get to this one. Oh, look at this one. What is this? 2020. What happened in 2020? We had a pandemic. Here's that bear market that we were just talking about. So you can sort of see, like, this is a bear market. This is a bear market. This technically was a very small, quick bear market. Actually, we even technically, this actually was technically a recession as well. So just something to put out there. And, you can keep on going back. You can sort of see bear market right in there. And down here, it's too small for us to really, we'd have to really pull things up to sort of see. I guess I can pull it up a bit more. Now, let's see. Yeah. So this way here, it makes it look a little more dramatic, but you can definitely see, it's a normal thing. So this here, though, and this is kind of interesting here. This is probably a really bad time because, coming in here, we had a big bear market. We were covered and straight back into a bear market again. So, kind of not a fun time, but you can sort of see the overall trend. The overall trend is up. And that's going to happen with this ETF, as long as they manage themselves well. But I don't think you need to worry about XUS because it's doing exactly what the S&P 500 is. And to me, that means, because you have to always look at it this way. When you have an ETF and it is tracking something else, use that something else as your benchmark. So if the S&P 500 year to date is up 5%, then you're hoping that your ETF is at least 5%, at least doing the same or close. You can have a little bit of a standard deviation on that, but that's how you know it's successful. So just something to keep in mind there. All right. Lisa says 1050 is my average share price. Oh, interesting. Isn't CFPE ratio very high? How is it compared to EE? Good question. I honestly don't know at this moment, but let me take a look here. SIA. So we'll go back into Sienna Senior Living. Let's go into our key data here. All right, a couple little things in here. Actually, I think these are looking better than the last time I looked at them. So the return on equity, return on assets are looking pretty darn good. All right, so we were asking about PE ratio. That's actually on the front page. That's fine. So their PE ratio here, 0.09. That seems a little low. That seems a little low. That's odd. Give me 1 second. I'm going to go to Yahoo Finance for this one because when I see a PE ratio like that, I need to see if it's just something weird. Because where they did you say they did a stock split? If they did a stock split, that might, there might be some irregularities on the TSX site until they get things fixed. All right, let's try here. SIA. All right, there we go. And PE ratio, here we go. Yeah, this is much better. 40.44. Yeah, that is a little high. That is definitely a little high. But keep in mind, it depends on what they're doing, right? If they're expanding that business, that could certainly push it up. Although where we're dealing with this type of a business, I can't see them doing a lot of expansion when rates are high. But it's hard to say. Now, the other one you said was EXE. Extendicare. So there's another old age one. And yeah, they have a better PE ratio. So that would almost indicate that they may be more undervalued. So that could be a good thing. That could be a good thing as well. So just something to keep in mind. Let's see. 9 says my average cost base or adjusted cost base. You can say either. Sometimes I say average. Sometimes I say adjusted, but they're both the same thing. For BTCY is 580. I just put spare change into it when it dips below. Yeah, not a bad thing. Not a bad thing. I mean, it's a good stock. I mean, it will come back up. But remember how I talked about, this is a great thing. I'm going to pull this up. One of the things I always talk about with covered calls is that you lose some of that upside potential. And one of the best examples of this is BTCY. All right. Whoops. Let's try BTCY. There we go. This is a great. All right, let's just go BTCY. Here we go. All right. So one of the best examples is this. So when we look at this ETF, let's go we'll go with the 3-year. So they launched back here. Basically, they launched when Bitcoin was making all-time highs before the crypto winter. So they launched up here. So they were launching, as you can sort of see. Well, on day one, they launched at let's see here. It doesn't tell me what they opened at, but they were around $10. Well, let's see here. Low, close. Yeah, then they went down. So they launched around $10, but then they went down. Now, Bitcoin has hit new all-time highs again up in here, but you'll notice, well, that price is a lot lower. Why the heck is that price a lot lower? Well, as they fell and as they recovered, especially during this recovery period, all of the capped potential that they didn't get. So all of that upwards momentum that happened to Bitcoin during this time, that they basically got their options got sold and they lost out on bits and pieces. Well, that's why. Look at this. You can see they at a new all-time high, they were only up about $7. So not that much higher. So that's kind of interesting. So, you're nowhere near where you were before. So you pretty much have lost about $3. So about $3, $3.50, somewhere in that vicinity in capped potential because of it being a covered call. That's just the way those things work. Now you can argue I did get a lot of dividends, and that's probably a lot of that is dividends. Sure, absolutely. So, but I'd have to actually sit down and do all of the exact calculations to find out. Now, if you reinvested those dividends, you would be a lot closer. I think you're going to still just miss it a little bit, but you can see that potential. But anyway, the whole thing is don't worry about the dividends. We're just talking right now about the stock price itself. That's that loss. That's what happens with covered calls. Now, the dividends, sure, make up for some of it. But at the same time, if you're holding something and you have somebody saying, well, okay, this gives you a 20% dividend or a 10% dividend, whatever it is, you're a lot of times you're not realizing, well, okay, well, I don't care if the price falls, but yeah, you should, because that means that you're not really getting 10% because you want to look at your total return. It's going to be much smaller. Now, the big exception is if you have a income portfolio and that's all you care about. You're like, I'm just stacking income in my TFSA. I don't really care if it goes down in price. That's fine. Just as long as the dividend stays stable, I'm good. Then you're probably not worried about that. And some people aren't, and especially, it also depends too, because, you can potentially make more money if you run your TFSA, for example, with total return opposed to an income. But there's a lot more work to it because you're not just pulling out your dividends. You're also calculating how much of that pie you're going to pull out each time as well. But you could potentially overall, like when your time is done, have a bigger TFSA at that point, which could mean more money for whoever you're leaving it to. So that is something that sometimes can be a consideration. But if you are that senior, for example, who's basically they just need that cash. They need that cash. That's because they can't live without it. Well, then you probably are going to be an income investor. So, and that's fine. That's fine. Now, Steve, if Steve was a Beatle, their song would be "All You Need Is XEQT." Yeah, there we go. Oh, I think I'll have a coffee after that one. What do you think of H-band? I hold some for my treasury duration part of my portfolio. So this is basically bonds. So let's pull it up here. There we go. So the Hamilton U.S. Bond Yield Maximizer. So if you'll take a look here. So one of the things that will happen is that and we'll go with 6 months here, as we start getting rate cuts, and you can see we started getting rate cuts around June, and you can see we're starting to trend upwards. That is typically what will happen. Now, bonds and treasury bonds, they have an inverse relationship to your interest rate. So as your interest rates come down, the value of the bonds go up. So, that is something that is certainly playable. It is also it does. These still are considered. I mean, they are considered fixed income. So, they're very safe. That's one of the things I like about them as well. And especially in this case here, so this is a U.S. one, right? So U.S. bond. Now, because it's U.S., they haven't begun their rate cuts there. So, even looking at this little bit here, this is more or less because of us being stable. So I'm correcting myself when I was saying June, because I was like, no, wait, these are U.S. ones. So in September, if we get that first Fed rate cut, that will be good for this bond. And I think a lot of people are probably starting to put some of this into their portfolio for that very reason. And I suspect that we will have, we will have rate cuts in the U.S. And I am thinking September is going to happen. But we have some data that still has to come out, like the CPI this week coming up. So we'll keep you guys updated on that. But right now, I am on board with a September rate cut on the Fed side. Let's see, XUS had a stock. Yeah, I thought they had a stock split. Let's see. Yeah, some charts are showing XUS as 50% down. Yeah, it's one of these things sometimes with stock splits, depending on, and I find I love TSX. I love this site. But if there's a stock split involved, sometimes it can mess up their data until they get it all figured out. So, I always keep that in mind. Let's see. I was down for a long time with EXE. Now I'm up 7% plus all the dividends, averaged down along the way. Glad I held on to it. Yeah, I think both EXE and SCI, I think they're both really good REITs. And as more and more boomers move into that later part of life, there's going to be a huge demand for what they offer. So I can see those as being some very, very interesting long-term holds for sure. Let's see, actually up 10.6% on EXE, just checked. Okay, cool. Nothing wrong with that. And I'm down a bit on DIV. Did you look into the earnings? I think they recently had an earnings call. I haven't looked into it lately, but I've been following DIV for a long time, so I do like them a lot. In fact, I will point out that so far I have made and how many did I buy? Let me take a look. I did make a purchase in the 0 to 100K in DIV. Actually, I bought another 11 shares, taking me up to 80. So right now, anything that can knock that adjusted cost base down a little bit, I'm good with. Now, I know that analysts are pegging DIV to be just above $3 in about a year's time. So I kind of agree with that. I do agree with that. I haven't looked at their recent earnings though, so I definitely want to look at them again. And I wouldn't mind actually doing another deep dive on DIV again. So, Ian, if you want, I can throw it in the pool. I don't just throw things in the pool. I got to get one of you guys to ask me to throw it in. So if you want me to throw it in the pool, I'll throw it in the pool. Kawachin says, sorry, what was the REIT ETF you mentioned? RMAX. RMAX. Now keep in mind, there is also a RMAX ticket for the US, but that's for REMAX. So you want to make sure that you got the Canadian one. But yeah, RMAX. And I am loving RMAX. Oh yeah, absolutely. All right, guys, we are coming towards the end. If you got your last minute questions, drop them in, and we'll take them from there. I'll have some coffee while you guys think about some ideas. All right, Ian says throw EXE. Now, some people may not even have an idea what we're talking about. So what is the pool? So this here is the pool right here. I'm just going to hit on my edit button. And here we go. EXE is now in the pool. So what I use the pool from. So when I do the votes for, sorry, let me just get down to Ian here. So when I do votes, because I let you guys vote on what deep dive I'm going to do, I pull them from the pool. So these are ones that have been suggested by you guys, and I will grab them. And so these here are the Canadian ones. These are the US ones, and these are the ETFs, because I also do ETFs as well. So I grab them I throw them up for the vote. So right now, I just opened a vote today, actually. And let me pull this over here. So right now, we currently have a vote going on. And we've got 61 votes so far. So right now, Brookfield Corporation is leading by 38%. So here's what I always say. Sometimes your favorite is not winning, but this is why it's important to vote. One, every week, whoever gets the lowest number of votes, they're gone. They're not coming back next week. So right now, if this vote ended, Affirm Holdings would be gone. They'd be like, sorry, you had your chance. You failed. You're gone. Now, the other thing is you'll notice these little numbers here next to it. So Baytex is on week 3. You only get 3 weeks unless. So right now, Dollarama is in second. But if Baytex finished in second, and let's say Brookfield won and Baytex finished in second, they can come back for a 4th week. So I give a bonus week if you can finish in second on your last week. So always fun to do that. So that's kind of the way I do it. And I pull, like I said, I pull these from the thing. So right now, Metro, this is week 1 for them. So if they don't win and doesn't look like they're going to win, they'll still get 2 more tries to win. So next 2 weeks, they'll, well, not the next 2 weeks. There's an ETF one in there as well. So I keep those separate, like we vote on the stocks. And once a month, we do an ETF deep dive. So that they will have the next 2 stock ones. They will have that opportunity. So that's just something that is over here. Also over on the Discord. And I'm just going to pull that back, get that off the screen. Also over here as well, we've got this new area called requested videos. So this is just a place where you can drop ideas. No guarantee I'm going to do them, but if you drop something in here and it's just absolutely awesome, I may very well do them. So definitely something to do. Just one of the many ways that you guys can get in touch with me and let me know what you want. All of that fun stuff. We also have over here deep dive requests. So if you don't, if you're like not on a video, for example, and you're just over on Discord and you're like, oh man, I'd really like to see I'd like to see a deep dive on Caterpillar. You can come over here and just put in, can you do a deep dive on Cat? And I'll throw them in a pool. Simple as that. It's kind of cool. Also, for new people, we keep a schedule in here too. So you can sort of see what is coming up. So, sometimes I just have like deep dive, market close, all of that fun stuff, because I know that Kawachin asked, when are live streams? Well, they're all in here. We got 2 guaranteed ones every week. The guaranteed ones are our Wednesday market close. We do a market close every Wednesday. And we have this week, that's our Sunday staple. Now, I normally give an opportunity to win some extra ones. So normally, it's like, 4 supers and you get an extra stream. So that does happen. Now, in addition to that, we also have a channel members exclusive live stream. That's going to happen August 22nd. August 22nd will be that. So that's one of the benefits of this. Now, that reminds me. I was sitting there the other day and I was thinking to myself, these live streams, they end up sitting on the shelf, right? So, the channel members watch it and they sit in a shelf and nothing happens to them. So what I decided is that I'm going to put those on the shelf only for a year. So once a year has passed on a channel member live stream, I'm going to release it. I'm just going to release it. And I did the first one. So the first one, I think it was my favorite Canadian YouTuber. So these things are a year old, just so you know. But it gives you guys a chance, those of you who are non-members, a chance to see what they are, and see if, maybe there's something you're like, oh, that's what they are. Okay. Oh, cool. I'm going to subscribe, or it's just an extra video. So basically 1 year they sit on the shelf and then they get released. Kind of a cool thing. So that means in September, I believe there'll be another one that drops as well. There's one though that I'm not going to release. It was probably the worst. I think it's the worst live stream on the channel. I did a reaction video to I think it was a Jubilee video, because that's what I got asked to do. The channel members do get to tell me what to do, and that's what they told me to do. It actually got hit with a copyright claim, so it's there, but I probably won't just release it because it's like I don't want to aggravate or have it regenerate the copy claim by changing the status on it. So I'm just going to leave that one alone. When that one comes up, we'll just skip that one. Trust me, it wasn't very good. It's like, I'm not I mean, I react, but it just, the content wasn't that good. I was just like, oh my God, I can't believe they made me do this. But that's okay. And that's part of the fun, right? So actually, it still falls on me. It falls on me because I should have made it more interesting or something like that. But yeah. So anyway, that one is just a go. Let me just see here. Can you post a Discord link? I can. Now, I know I skipped a couple of you guys. I'm going to get back to you in just a second. I'm going to get myself a new Discord link, though. Let's see here. Invite people. Just because sometimes the link down below expires. It's not supposed to expire, but sometimes it does. Edit it. Number of uses. No limit. Expire. No. I say never. No limit. But yeah, it will still do it. All right, here we go. Gonna grab it. I will drop it in the chat. And voila, there we go. All right, so there is our Discord thing there. All right. Let's see. Can you look at the ETF T-Grow? All right. One of these growth ETFs here. I do like them. I do like them. All right. So this one here is the TD Growth ETF. So T-Grow. All right, here we go. Let's take a look at just, so you can see, I'm actually going to go further back. You can see, once again, this one here is going to very much follow what the market's doing. So you can see here's the bear market, and then it began recovering, and it's been doing really well, and it will do well through through the bull market, no doubt whatsoever. Now, you don't get a huge yield on these, so 2%, but a 2% yield with this type of movement is actually a pretty darn good total return. So I'm thinking this is going to be good. This is going to be good. All right. Sandra says, I'm expecting a volatile week in the U.S. Yes, it's going to be an interesting week. First of all, on Tuesday, we got the PPI coming out. So with the PPI, so that's the Producers Price Index. So it's basically it gives you an idea of wholesale inflation. So that if that doesn't go in the favor of inflation reducing, so if that one were to show inflation increasing, that would be enough to make the market go collectively red as they start to expect, oh boy, if it happened here, what's going to happen on the Consumer Price Index on the next day? So that can sort of freak people out a little bit. And even with the CPI, there'll be people, there's a lot of people right now that are just expecting everything to hit the fan, like constantly hit the fan. So, you will see a lot of volatility from these. Now, the third thing is on Thursday, you got the retail sales, but I don't think that's going to play. That's not going to freak people out. People are not going to be worried. They're mostly going to be worried about the PPI and the CPI, which is actually kind of funny because the Fed really likes the PCE. So the personal consumers expenditures. So, and that, I don't know when that's due out. I think there's definitely one before the September rate decision. So that can definitely be interesting as well. For sure. All right, everybody. Whew. I think this is another one done. I think we've hit the end of the runway. You guys have lost your will to ask questions. We will be back here on Wednesday, of course, for the market close. On Wednesday, I will give you guys an opportunity to gain another market close for Friday. So we get that to look forward to, and we'll be able to look at that PPI and CPI data on that stream. So it's going to be fantastic. So until then, everybody, have a don't go yet. Don't go yet. Don't go yet. Oops. There we go. I just want to go back to full screen here. Every so often I leave and I'm still in little head mode and I'm like, no. All right. All right. And as always, appreciate Mary. Mary is an awesome, awesome, awesome woman who's been coming here for a long time. So, everybody, have a fantastic what's left of the weekend. Hopefully, the markets treat you well early in the week, and I'll see you guys on Wednesday. Take care, everybody.